Okay, good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted this week to be joined by Matt Reed, Vice President of Foreign Reports based in Washington, D.C. Matt, thanks so much for joining us today.
Thrilled to be here. Thanks for having me.
Well, great to have you and lots to catch up on, all things OPEC and the Gulf and oil. Let's start by, talking about let's keep things current, I suppose, with all the machinations that are happening and sort of springing out of Washington, D.C. from Donald Trump, the US president, on geopolitical relations across the globe, really. But I'd like to focus on the Gulf with Saudi Arabia first. Let's take the US-Saudi relationship. Obviously, recent visits also with each side coming to each other's capitals, a lot of investment being promised from the Gulf, from Saudi into the US. And then we have the complication of regional instability here in the Middle East and what the US is trying to do in terms of a peace process. So give me just to start off with your perspective today on where the Saudi-US relationship stands. Is it all the same as it has been historically, all hunky-dory, or do you see some conflicts of interest there?
Let's say it seems stronger than ever at this rate when it comes to the diversity of interests, the depth of interests. For a long time, U.S.-Saudi relations were kind of one or two dimensional. It was about security. It was about oil. Not that long ago, 10, 15 years ago, the U.S. was still buying 1 million barrels a day from Saudi Arabia. And that's really what counted. Of course, the shale revolution kind of turned things on its head. There's been some ups and downs in the relationship over the last decade, but as of right now, today, 2025, certainly the U.S.-Saudi relationship is, I think it's much broader, it's much deeper. A lot of that has to do with this administration in the U.S. and the encouragement of Saudi investment, but also too, one thing we've seen this past year is how crucial U.S.-Saudi ties can be in times of crisis, right? When things are going well, when the conversation is about investment, things are relatively simple. But when there's a genuine crisis and conflict, that's when the U.S. and Saudi Arabia and some of its other Gulf partners can come together and help negotiate a ceasefire for a 12-day war between Israel and Iran, when they can at least unstick the crisis in Gaza and at least try to nudge things in the right direction. I mean, that doesn't happen with the U.S. alone. It has to happen with the U.S. and reliable partners.
Okay, yeah, as you said, nudge things along. Clearly, big challenges in the region, and I suppose we're all waiting to see really, so we get some clarity on where this is going. Well, let's talk a bit about that in the context of Saudi-Russia relations. We've got a group called OPEC Plus, which has been running now a lot of market commentators would say very successfully in managing their part of the market at least, and managing sort of oil price stability as much as is possible, albeit from influences by the US and others on that front. But, again, you've got the Saudi-Russia relationship, and then you have the US again on the side now with its sanctions on Russia, for example. It's sort of yo-yo really back and forth with these sanctions to an extent. One day it's hard on Putin, the next day it's not. How is that, do you think, being interpreted by Saudi Arabia as the leading member of OPEC Plus in terms of, does it have clarity on what US policy is on Russia, and does that matter?
I don't think, speaking just from our perspective here in Washington, D.C., it's very difficult to game out what the Trump administration will do next in regards to Russia. Who knows whether anyone knew what was going to happen last week, which is these new round of very tough sanctions on Russia's two largest oil companies. Either way, if you're the Saudis, certainly OPEC Plus has shown how important and crucial it can be in managing the market. Um, Obviously, especially in times of crisis, in the aftermath of COVID, and then trying to triangulate supply and demand in the years after. Certainly the oil market would be in worse shape without this kind of coordination, and OPEC knows it can't do it alone. So it needs Russia, it needs other countries to chip in and to do their part. Um, I think the situation with sanctions is such that Saudi Arabia and the rest of OPEC Plus are going to have to manage the fallout
Right.
reluctantly, not proactively. OPEC certainly is not in the business of underwriting sanctions on some of its members. It doesn't want to have to do that. But if we start to see prices tick up, if we start to see Russian production come down, exports come off the
Mhm.
market for a stretch, for months potentially, at some point, countries like Saudi Arabia, reliable Gulf producers that have some spare capacity, they're going to have to step in whether they like to or not,
Well, why
or at
wouldn't
least
they
they'll feel
like to?
compelled to.
I mean, I would say they probably would like to, wouldn't they? Because they've all had to cut obviously production, or they have led by Saudi again. And now, of course, we've seen a few of those, some of those barrels start to re-enter the market this year. But surely that would suit members such as Saudi and UAE who'd have that spare capacity, who have had to, obviously abide by certain quotas, even on themselves. So would they, in this current market of lower oil prices, wouldn't they welcome that? I would imagine. And are they? I mean, on that spare capacity front today, if we speak just today, do we have a shortage of spare capacity? Because there are some in the market who say we do.
I think the question of spare capacity is going to be really interesting once we get more into next year, right?
Yeah,
It's like
and
this time
demand,
next
obviously.
year, the conversation could be very different. For right now, what's striking to me is just that everyone involved in this market knows that there's a glut coming or there's one underway, but the gap in estimates of how many extra barrels there will be, right, is huge. And
Indeed, yeah.
we're not talking about rounding errors here. We're talking about millions of barrels a day. The EIA here in Washington thinks that we might have a 2 million barrel a day overhang next year. The IEA thinks it's going to be double that. No, I'm not going to comment on who's right. We're going to find out one way or the other soon. But these are huge sums. And, fast forward to the midpoint of next year, summer demand comes back. Obviously, by then, OPEC Plus will have unwound a total of what, 4.65 million barrels a day, something like that. Or sorry, a little over 4 million barrels a day will have been unwound in, a year and change. At that point, we're going to know which members of OPEC Plus can actually produce what they say, and which ones of them have lost capacity since COVID, which ones have hit a ceiling since COVID. So quickly, you can see the conversation turning, but probably not for another, 2, 3 quarters.
That's interesting. Yeah, I mean, as you said, in the last few years, that pressure on testing capacity has not been there. It's been in fact the opposite. Testing, resilience, not to overproduce, I suppose, on the quotas, etc. I mean, let's talk a bit about a couple of those other members of OPEC and OPEC Plus who have not been producing a lot because of their inability to produce. I mean, you've got countries, and specifically, let's talk about Libya and Iraq, because of course we've seen some recovery there and bouts of yes, it's coming back, but of course the geopolitics always interfering. Where would you put Libya and Iraq separately, perhaps one at a time, on what their trajectory is in the next, let's say, 2 or 3 quarters that you've just mentioned?
Well, Libya is defying gravity at this rate. I mean, if you look at kind of the broader picture there, the country is still on paper, it's politically dysfunctional. It has rival governments in East and West. The only reason that oil is producing at the levels it is, and it's been about 1.4 million barrels a day going back a year. It's been very stable because both sides are able to spend oil revenue freely. They both have budgets. They both have their own, expenditures. Obviously, if the flow of money breaks down, that's when oil usually follows when that happens. But that
Right.
hasn't been a problem now for over a year. Of course, that is a situation that could change overnight. Usually with Libya, it's a case of production literally coming offline suddenly in big chunks. The last time it happened, Libyan production was halved in a matter of days. We're talking about 600,000 barrels a day that suddenly shut in. Um, so, Libya is a curious case where it can defy gravity for as long as it can. Um, and for now, it is. I think the interesting thing with Libya, too, though, is that uh, for the longest time, no one really took Libyan production for granted because it was unpredictable. It would go up, it would go down. Really, it was very rare over the years. And maybe going back another, decade and a half to the revolution, the uprising in 2011. Libyan production was essentially a roller coaster. And because of that, the market kind of tuned it out. If it came
Right.
back, that's great. If it went offline, you couldn't count on it anyway. I think the difference now, though, with Libya, especially looking to 2026, is that if volatility returns, if these political disputes start to shut in production, if that happens next year, when the conversation has already, the market narrative has already pivoted to spare capacity, well, then all of a sudden, Libyan production or the absence of it could start setting prices again.
Of
Uh,
course. Of
and
course.
then to your question about Iraq, um, what's great about Iraq right now is that the outlook is actually really encouraging. For a long time, resource nationalism really defined Iraq's interaction with international companies. And over the past 20 years, I think the Iraqis have uh, figured out that, when Iraq was this kind of hot, enticing prospect, there was real potential there. Uh, sure, they could agree to harsher terms. They could agree to less favorable terms, I should say, with international oil companies. But as those companies eventually decided to, spend their resources elsewhere, in places like, offshore in some countries, or even just going back to the U.S. and investing
Yeah.
there, what Iraq learned was that, well, at some point, the only people you can do business with are with the Chinese, and the Chinese can't necessarily do everything you want. So we've seen in the last few years under this prime minister, Sudani, is that uh, the Iraqis have been much more willing to kind of look themselves in the mirror, ask themselves, okay, what do we want to achieve? What are our ambitions? And then how do we attract the best possible companies to come here and do that work for us? So we've seen some huge deals just in the last year or so with BP, Total. It's really like night and day if you think about it. It wasn't that long ago that ExxonMobil
Yeah.
decided Iraq isn't worth the trouble.
Yeah.
It's just
Yeah.
not worth the trouble. Exxon walked away a couple of years ago after a
Just
really
when everyone
difficult
else started coming back
divorce.
in.
And then everyone starts to come back in. And sure enough, what happens just recently in the last few months is news breaks that, oh, Exxon is actually going to go back and test the waters in Iraq. Um, so you can see it's been, transformative is the only word I can think of.
Okay. That's okay.
So the outlook is
Fantastic.
good.
The outlook is
And then
good.
also Iraq is one of those rare countries where you can see that there is some ceiling here. There is more capacity that they could add in a pinch potentially. The other good sign, of course, is that they have, at least for the time being, resolved their dispute with the Kurds. So
Yes.
there's no oil exports coming out of the north again.
Well, and long may it last, hopefully, in a country in dire need of revenue, and its economy obviously needs to recover. You mentioned China there as obviously an investor into the country, but let's talk about China and also its imports of Iranian oil, because of course it has been the sole supporter of Iranian oil exports, really, effectively for the last few years. And how much are U.S. sanctions on Iran and secondary sanctions, talk of that, snapback, etc., impacting Chinese thinking, do you think? I mean, we know that Iranian oil is still going, but we did have one or two refineries hesitating, cutting back because of the fear of secondary sanctions, in the context, of course, of this U.S.-China trade deal negotiations that continue. Where do you see China's stance on that? And indeed Iran's, if it has
So
one.
just to rewind to the most recent, sanctions development, which is snapback sanctions linked to UN resolutions that, we're talking about resolutions that were imposed literally like 20 years ago.
Yeah.
They were never really designed to hurt the oil sector. In fact, they were meant to do the opposite. They were meant to target military industries, nuclear industries. So I think the snapback sanctions are largely a sideshow, at least when oil is concerned. What matters much more is what the U.S. Treasury does, which kind of third parties it goes after. So what we've seen under the second Trump administration is that they are casting a wider net at the Treasury. They are going after not just ships and front companies, but they're starting to go after ports that handle
Yeah.
this, the Iranian crude. Now, at the same time, the rules of the game have changed a little bit, but the results also speak for themselves because the Iranians are still selling upwards of 1.5, 1.6 million barrels a day to China. They have to jump through some more hoops. They have to disguise their oil as different origins now. But clearly, a lot of that oil is still reaching China, even though the US, seemingly on a weekly or monthly basis, continues to add Iran related companies and cutouts to the designation list. So until something changes, until the US is more aggressive, I don't see a reason to believe that Iranian sales to China would necessarily go down. One thing China benefits from is that it has built over years this kind of parallel financial network that allows some of these independent refiners to buy sanctioned oil and not worry about the consequences. They don't have any exposure to US
Yeah.
penalties. They don't have to worry about being blacklisted. And to take that a step further, you know, China has that advantage. Iran obviously benefits from it, but I think the question now, the most important question for the market is, can that kind of shadow banking network facilitate more imports of Russian oil? Because the problem for the Russians now that Rosneft and Lukoil have been sanctioned is that it potentially really narrows the customer base. Legitimate companies that bought Russian oil for the past few years now have to ask themselves, is it worth the trouble? Or at these prices, can we just buy from legitimate
Yeah.
sellers, unsanctioned sellers?
As you said, I mean, as the price has dropped, that advantage, hasn't it? The discounted Russian oil loses its advantage. I mean, talking about shadow banking, but the shadow fleet itself, is growing. And we have many conversations about not just the fact of where's that oil heading, but the risk of spillage, the risk of lack of insurance, lack of sort of oversight. Do you see that in any way dissipating in the year ahead? In terms of the growth of that shadow fleet, with all the pressure it's under, as you said, that oil keeps flowing. Can the international legitimate community bring it under control? And indeed, do you think there's an interest to?
I doubt it at this rate. I mean, the shadow fleet is hundreds of ships we're talking about now. You know, again, the question of sanctions and their effectiveness really comes down to exposure, and the people who are chartering these ships, using them, they have minimal exposure. Even in the event that, let's say, there is a tragedy where a ship does, pollute a waterway, or there is an accident. It's hard to imagine there being much recourse when these are pretty much outlaw ships anyway. They're not insured up to industry standards. The danger is kind of ever present. And the problem now, too, is that the shadow fleet is growing with these designations by the EU and the US. So it's possible that the problem won't subside or be diminished. It might actually just get worse as more of these ships go dark.
Okay, and Matt, I know that you also follow Syria, of course, a country that has just had a new political beginning, still very much in flux from everyone's observations, but it does have its own oil sector, and at one point in time, that was looking like it had some potential 20 years ago, maybe. The future of that, I mean, do you believe that there's enough belief and stability in the country for investment to come back in, or will that really have to take a back seat for the time being?
It probably has to take a back seat. The number one issue is security. Any company that's going to assume the risk and invest billions of dollars rehabilitating that industry, they have to know that they're safe, that this government and any agreements that they ink with it is going to last. No, I think kind of very much the near-term priority for Syria is to make sure that local refineries are supplying what they need, that they have access to steady imports right now, because if you look at the damage that was done to the Syrian oil sector over time, not just by combatants on the ground fighting for some of these fields back and forth, losing ground, gaining ground, uh, but you also look at how the U.S. attacked it at every single link in the supply chain for years. It's been years since the U.S. attacked, but the U.S. made a point of not just striking the wellheads, but exploding wells from below. So you're talking about a huge undertaking. It's going to cost a lot of money. The state of pipelines, that stuff that is going to have to be, it can't be repaired necessarily. It probably has to be scrapped and replaced. So these are questions that are going to be answered over years. The
Yeah,
good news,
yeah.
though, I would say, if there's a silver lining here, or kind of an optimistic twist, it's that at the very least, this government in Damascus has the support of Washington, of Riyadh. The key players who can help all want to see Syria succeed. And I think in time, the oil sector will probably be part of that
Yeah.
equation.
But at the end of the day, as you said, it's significant for the country itself, but a drop in the ocean maybe in terms of the macro dynamics of the global oil industry. And just talking about that, Matt, maybe perhaps just to sort of start wrapping up, if we can touch on the US and US production. I know that's not necessarily your specialty, but you're in Washington D.C. But from a policy point of view, even does the industry in the US have confidence that the drill baby drill mantra will actually be facilitated with actual, policy? So far, the signals are there. But again, the trajectory for US production, it's stabilized around 13 million barrels a day. Many saying it's not going to move much past that. And also just in the context, let's put in just in the context of what's happening down south with its fun and games in the Caribbean around Venezuela. And is that really a matter of, again, securing its oil security to an extent, certain types of crude? What do you think is behind that?
So if we're talking about the mood in the U.S. with U.S. producers, yes, the U.S. is producing record amounts of oil right now. We're up around 13.5 million barrels a day. The expectation is that U.S. production will probably hang around there for another year. But I count a lot of American oil companies among my clients. And to paraphrase them and their sentiment, it's clear to everyone that everyone's holding their breath and waiting to see how severe this glut could be. Obviously, what really counts is prices, what direction we go in, how bad things get. You've got a lot of companies now that are setting their budgets for the year ahead, and they are, I wouldn't say nervous, but a little apprehensive, just because if the EIA
Yeah.
or the IEA is right, we are going to see a significant glut and prices are going to fall. Now, US firms at least were able to hedge a few times this year. They might be able to do so again soon, lock in better prices. Uh, of course, what helped this summer was that even though there was a lot of OPEC oil coming on the market, there was also a conflict in the Middle East that threatened that rising production. Prices got a boost from it. Uh, but as of right now, I think it's funny. You look at the mood here, and also I think the mood even over there where you are. Talk to officials and industry executives about what's happening right now, and I don't think anyone can speak with certainty about the next 3 to 6 months. Um, for sure, I think the most telling thing for me when everyone kind of agrees, right? There's a consensus now that there's going to be a glut. No one agrees on how long it's going to last, how bad it's
Yeah,
going to be.
timing.
And the most telling development to me is that OPEC has now reached a point, OPEC Plus, I should say. OPEC Plus is now making policy month to month. This was an organization that used to make policy by quarters and 6 months and years potentially.
Oh no, it's it's
Uh,
it's more week but to
and
week even, you could argue,
Sure, but
internally at
it's
least. Yes.
I mean it's also more nimble. But I think that that humility speaks to this moment where supply and demand really do feel like a moving target.
Yeah.
And a big part of that is because there's a huge wild card we haven't really talked about yet. which is the rate at which China is adding to inventories. The Chinese have soaked up a lot of barrels this year that they won't
Yeah.
necessarily use anytime soon. And the question, of course, for everyone is, okay, well, how long is that going to go on?
Absolutely, and it's been soaking up obviously price reliant. It's been taking advantage also of relatively low prices. But how long would that go on from a price point of view for oil and also its economy? There's all questions about China's economy still growing, of course, but a lot of transition there from an oil consumption point of view and otherwise. Matthew Reid, Vice President of Foreign Reports, it's been great to have your insights today on Halftime Talk. Thanks so much for joining us.